Okay, hi guys, Zaheer Anwari here. Can I get a quick hello and a mic check and screen check, please? Yeah, hi administrator. Okay, sound is fine, and you can see the screen. It should be the chat box at the moment. Yeah, okay, fine. Okay, can I get an idea of how many people are actually in the room at the moment? So I can see um, just one person in the online chat, but just to get a rough idea of how many people are actually sitting in on this webinar. Okay, about 5. That means there must be a half person on here. I guess you're rounding it up. Yeah. Okay. Thank you. Thank you for the 5 people that are sitting in. Okay. So FX Street. Thank you very much. So how can I start this? How I want to start this, guys, is by asking, if you are trading foreign exchange, why? Why are you trading in this current moment, in this current market environment that we're in? If you are executing trades in the foreign exchange market, you have to ask yourself why. The reason I say that is because foreign exchange is pretty much dead at the moment. There's very, very little going on. The market as a whole is range bound. And if you find yourself executing trades in this environment, what you have to ask yourself is, do you understand market conditions? Do you truly understand market conditions? Just because you've got a broker account, just because you've got a bit of software available to you and you're executing trades, do you actually understand fully market conditions? And hi Nick, thanks for the message. Yeah, guys, if you're in there and if you're listening to me, please say hello. I know we're all sitting at the end of computers, but it would be nice to get a hello and just so that I know you're there. So going back to what I was saying, the reason why I'm saying this is because as traders, what we want to be able to establish are high probability environments. This is what trading is all about. Trading is about understanding when to trade and understanding when not to trade. This is good trading. Trading is ultimately an art that has its own unique set of skills that you must learn to appreciate, nurture, and master. That is what trading is about. Just like any other skill, just like any other art, any other career choice, you start off as a complete blank canvas. You have an interest in it, and over weeks, months, and years, you perfect yourself within that career field so that you can deliver the best possible job to your clients ultimately. Or if it's a sport, like I don't know, whatever it may be, you want to be the best that you can at it, whether it's for fun or for professional reasons. Hi Carlos. Trading is no different, yet trading is often overlooked as almost like a lottery ticket, where you can just select a few indicators, whack it all together, and kind of hope that it works. And if it doesn't work, go and find another set of 3 indicators, whack that all together, and see if that works. Adityan, I hope I'm saying your name correctly. Hi. Alexandra Turner, brilliant. Okay, great. I just feel so much better when I know there's people listening to me, because sometimes the chat box is very quiet and I don't know who's out there. So excellent, guys. Okay, so this is ultimately what you should be. This is what you guys should be starting to really develop within yourself as traders. First of all, understand what is good technical analysis. There's good technical analysis and then there's bad technical analysis. Understand what makes good technical analysis. Then once you've understand what is good technical analysis, what you then want to understand is high probability environments. Okay, so remember, technical analysis is just breaking down a chart. Don't mistake technical analysis for trading. They're 2 different things. So understand what is good technical analysis. Then understand high probability environments. Not entry points, guys. Environments. Get away from thinking in just entry. It's so easy to find an entry point, a breakout or a pullback or a bounce off a moving average, pull back to a Fibonacci level. It's very, very easy to find entry points, but that's just the start. Beyond that, you have to understand, well, okay, here's my entry point. Where am I going to place my stop loss? How am I going to calculate my stop loss? How much do I want to risk? Is my stop loss is my stop loss suitable for this particular currency? The euro dollar, for example, moves 90 pips a day, let's say. The pound Japanese yen moves, I don't know, 180 pips a day. You can't have the same stop loss for both currencies because the pound Japanese yen is far more volatile. You then have to think in terms of levels. How far can that particular trade move towards? Where most private traders go wrong is that they have a fixed risk to reward. 1-to-1, 1-to-2. When you have a fixed risk to reward, it's almost like you are predicting the future. What you're saying is that this is as far as the market will go. I'm happy to take profit. It's incorrect. No one really knows how far the market is going to go. But you've got to understand levels. And a key way to look at levels is round numbers, and I'll cover some of these concepts in a second. The guys who've been following me for a while, you'll understand what I mean by round numbers, but anyone that's new on here, round numbers are a very good way of holding position. Remember the underlying philosophy, guys, to trading. The underlying philosophy is the trend is your friend until the bend at the end. Everyone knows this. Everyone's well informed about it, but very, very few people know actually how to execute it. So when you are in a winning position, you want to be able to hold those positions for as long as possible, weeks and months at a time. You want to make trading effortless. You want to make the execution of your trading plan and your strategies and the extraction of profit from the market, it has to be effortless. If you're inconsistent, if you're struggling, there's something wrong with your approach, your strategy. And let me make something very clear here, guys. There's nothing wrong with you as a person. It's not your psychological ability. Often when something goes wrong, people then turn to their psychology. If you understand price, if you understand how price moves, if you understand the natural features to price, if you understand how to apply patience to trading, psychology takes care of itself. And I don't mean overnight. Yes, it takes time to understand levels and to hold during periods of pullbacks and to apply patience and to wait for breakouts and to wait for end of day closing prices to confirm breakouts. That is where the psychology of trading comes in. That is where patience comes in. But that takes time. It takes time to understand and master. So private traders have to take a step back and really start thinking about what it is that they want to achieve from trading. How is it they're going to go about achieving it? A realistic time plan in which to achieve it in. That initial philosophy, that initial approach to the market is usually totally wrong. How they're going to approach it, day trading and scalping. When do they want to achieve it? Well, in the next few weeks. It's just totally incorrect, and it has to be revised and reviewed, and you've got to start learning to really appreciate what it is that a private trader has to achieve. Remember, you're not an institution. You're not a hedge fund. You're not a bank. You are an individual that works hard. I'm assuming you're all in jobs. You're all professionals. You're all business people. You're married. You have kids. You have family life. What you're looking to do is to leverage your salary and your money through trading. This is ultimately what you guys are trying to achieve. But at the same time, you want to do that without compromising your job, without compromising the money that you've saved up, without compromising time with your family, your friends, your kids, without compromising doing the things that you enjoy in life, i.e. going to the gym, traveling. In fact, you turn to trading to have more of that, to have more time. Trading is not about the money, guys. Money means nothing if you don't have the time to spend it. So what you want is to be able to turn to trading, to have more time to enjoy the money that you're making from trading. That should be your vision. And the way to do that is to look away from FX. FX is dead, okay? And you want to start branching out into other markets, i.e. stocks. US stocks must be fundamental to your portfolio. UK stocks must be fundamental to your portfolio if you're in the UK. If you're not in the UK and you can trade UK stocks, then you should definitely start looking at UK stocks. You want to have commodities within your portfolio, within your watch list. Okay. I don't know. That did go on a little bit, probably longer than you probably had wanted. But my point is, guys, you've got to start appreciating the time that you have to really make a significant difference to your lifestyle. And the way a lot of private traders are doing it is not the correct way to do it. Okay, let's get to the charts so that I can start really explaining what I mean by not only trading foreign exchange. Okay, I'm just trying to bring it up. Okay, here we go. Administrator, can you give me confirmation that you can see my e-signal there, please? Yes, all good. Okay. Okay, guys, before I forget, there is something that I want to talk about. If you guys are in the UK and you want to attend a live training session on Monday, I've got a few spots left. I literally do tiny group classes. There's no more than 10 to 15 in the class, and this is practically sold out. There are 1 or 2 spots left. So if you're in the UK and you want to attend a live training session on Monday, you can do. It's £99 for a whole month. So it's 1 day of training, which is Monday, and then it comes with a whole month of community support. So if you're interested, please check out zaheer.live /seminar. If you're not in the UK and you want to do the training as well, then I have an online training, which is zaheer.live /apprentice. So this is if you want to do the live training. This is if you want to do the online training. You can, of course, do the online training if you're here in the UK as well and you can't make Monday. All right, it's a really good entry point into the market. And I mean an entry point. This isn't the answer, but it's a good entry point to understand good technical analysis, understand high probability environments, understand how to use the right strategies in the right market conditions, understand entry points, compounding, risk management, portfolio management, stop loss management, exit management, everything that is required to, from the very basics all the way through to executing a trading plan with a breakout strategy, a pullback strategy, and everything in between. This will all be covered on the 1 day of live training. That's how simple trading should be. You can cover this in a day. But where the art, where people need support, is putting that into practice. And that's why it comes with a whole month of community support. After that, you can continue staying in this community. You can move on to bespoke one-to-one training, which we offer, or you can leave because the information that you've got is enough to go away and start trading. Okay, so please check this out. As part of this, you also get this ebook. So a lot of the concepts that I cover in the training, you've got the trading bias, establishing the trend, support and resistance, all the way down to trading plan. This is also part of the training. You'll get this for free. This, by the way, was written by Anne Chapman. She's the amazing lady who taught me how to trade back in 2007. So notice here it says almost. That's because whatever is needed to actually execute trading is covered in the training. Okay, so this is all encompassing. It all goes together. Okay, so let's go into the chart. So if you want to email me as well, zaheer@zaheeranwari.com. That's my name, obviously, zaheer@zaheeranwari.com. Okay, administrator, sorry, I've just changed screen again back to the software. Can you see my charts, please? Yeah. Yep. Okay. Fantastic. Brilliant. Okay. So what you can see in front of you is a typical chart setup of mine. So I encourage private traders to get away from day trading and short-term trading. It just isn't as effective as long-term trading. It may work, it may return your profit, but if you're capping your profit, which is what day trading is about, entering and exiting positions in the same day, if you're capping your returns, that means you're capping your profit. So if you have losses and if you have profit, it all really cancels each other out. A lot of hard work for very, very little gains. You have winning days, you have losing days, and then it leads to frustration, over risking, and ultimately losses and blown accounts. It's a very typical approach. So what we want to do is remove those targets. What we want to think about is, first of all, understanding how to establish high probability environments. Once we understand how to establish high probability environments, we want to find an entry point. Once we found an entry point, we want to understand how far this particular trend can go on till. Once you've understood how far that trend can move on for, you then want to bring in trailing stop losses. So rather than having a fixed stop loss, you want to have a trailing stop loss. And this trailing stop loss should be wide enough to allow for the pullbacks in the trend. And you want to be able to hold and wait for the next breakout. When the market breaks out, you compound. It's no secret to trading. This is what all the best traders and investors do for decades. I mean, if you haven't read How I Made $2 Million in the Stock Market, you need to read that. If you haven't read Reminiscence of a Stock Operator, you need to read that. If you haven't read Way of the Turtle by Curtis Faith, you need to read that. These aren't the answers. Way of the Turtle has the strategy in the back which they used, but market conditions have moved. That strategy which was used in the 80s is not so relevant today. You want to have an adapted approach to modern market conditions. But the point is, if you read these books, they all did the same thing. Wait for trends, held positions throughout the trend, and as long as trends were in play, they kept on compounding. That's how people have achieved exponential growth. Warren Buffett has a similar approach, but he's an investor. Okay, but ultimately he's embraced compounding, and that's what you guys want to achieve. Rather than being in and out on multiple positions, take a few trades, hold them, and compound. So to establish high probability environments, what I use is the monthly, the weekly, and the daily time frame. So I have 3 time frames. The monthly is where I look for major areas of support and resistance, which are highlighted by the red levels and the green levels. Again, there's a rule to everything that I do. There's an algorithm to each of these. Everything that you see, there's an algorithm. There's no subjectivity. That is where a lot of private traders go wrong. If you ask them, why is that a support or resistance level? Usually the answer is, well, it feels like one. I think it's one. There's a lot of emotional words involved. I hope it's one. What you want is, well, that's a level of support and that's a level of resistance because, and give me the reason to it. So there's an algorithm and there's a logic, and I'll give you the logic for this, guys. A major pivot is a high bar or a low bar with a minimum of 10 bars on either side. Okay, a minimum of 10 bars on either side. So on the monthly time frame, that's what I'm looking for. And I have a tool which will automatically count pivot points and then highlight it as a major pivot. As soon as a 10th bar is detected as the high point, it will plot it as a level of support or resistance. Okay, so if you have a look here, we can see now we got a green line. That's because this has now been detected as a major pivot support level. We've got 10 bars to the left and 1, 2, 3, 4, 5, 6, 7, 8, 9. As soon as this red 9th bar was detected, the software started drawing the green line. If you're spending hours a day drawing support and resistance, which is what a lot of private traders do because they have cheap software or free software which is poor in functionality, what you're doing is you're wasting hours of your day doing mundane jobs when you could have a tool that does that for you. What this means is that it frees up a lot of time to make better trading decisions rather than being rushed into making trading decisions. And then secondly, you have more time in the day generally, which means you can adapt this around your lifestyle. So you want to have good tools that will do this for you. The pink lines are the annual levels. So that's the high and the low and the closing price of 2016. So the closing price of 2016 is the opening price of 2017. So the high and the low represents the range of last year. What I'm looking for is price to be trading outside of the range of last year. So now I'm starting to establish high probability environments. So if price is trading above the high, price has a bullish bias. Below the low, it has a bearish bias. If it's inside, it's a consolidating market. So if you've executed any trades on the Aussie dollar, US dollar in the last 2 years, then you've been trading it in a time where you have more chance of losses than profit. What you want to be trading are trends. And this is a trend. You can see quite clearly the market has a direction to the downside. Here, the market has a direction to the upside. So this is a bullish trend. Then we had a correction. Now look at where the correction happened. This is my point. Round number 0.9. Correction then went to 0.8, which was a previous resistance, which is now acting as support. The market then bounced. It went all the way through to 1.1, which is a round number. The distance between round numbers is 1,000 pips. So if you can enter into a trade and hold your positions from one round number to the next, that's how you allow your positions to run. So let's say we have a breakout to the downside. What I want to see prices then move towards 0.6, 0.5, 0.4. I hold. If you look at any chart, you'll see that they are major pivots at round numbers. Okay, weekly and the daily, I have the 200 moving average on the weekly, which gives me the bias. So what I mean by that is if price is trading below the 200 moving average, price has a bearish bias, and above it has a bullish bias. So above I want to go long, below I want to go short. I don't go against the bias. And the same on the daily time frame. Above I look for long opportunities, below I look for shorting opportunities. What I'm looking for, guys, is alignment between all three time frames. So if I'm looking for a bullish market, I want price to be above the high on the monthly time frame, above the weekly 200, above the daily 200. That's a high probability bullish environment. If I'm looking to go bearish, I want price to be below the low on the monthly, so that's below the low of 2016, below the weekly 200, below the daily 200. That would be a high probability bearish environment. In addition, I would look to my trend filter. So I have a proprietary trend filter which highlights areas of bullish trend when it's green, bearish trend when it's red, and black is where we may be in a consolidation. So above the 200, I want the trend filter to be green, below I want it to be red, and the same on the daily. So you can see my checklist, guys. That is how I would define a high probability environment. I have my checklist. I'm looking for all of these factors to align between the monthly, weekly, and daily. If these factors do not align, then I do not take the trade. So if we have a look at the Aussie dollar, US dollar, it's inside the pink lines. For me, that's enough reason to not take the trade because I want it to be outside. However, if we just do further analysis, below the weekly 200, trend filter is green. Above the daily 200, trend filter is black. So we have no alignment on the Aussie dollar, US dollar. And for that reason, I don't want to be taking any trades. However, if we look at the Aussie dollar, Canadian dollar, sorry, not the Aussie dollar, Canadian dollar, Aussie dollar, Swiss franc. The Aussie dollar, Swiss franc is starting to look quite interesting. It's not ready yet, but it's looking quite interesting. Why? Well, the first criteria I look for is price to be trading outside of the pink lines. That's happening now. We can see that price is starting to push above the high of last year. If we go to the weekly, we can see that price is still below the weekly 200, but the trend filter is green. But you can see it's struggling to break through the 200, which shows how it acts as a level of support and resistance, in this case resistance. And if we go to the daily time frame, we're above the daily 200, trend filter is black. So it's looking interesting, but it's still not there yet. You kind of almost want to look at it like a chicken in the oven. You know, if you put a chicken in the oven and you're roasting it, and it's going to take, let's say, an hour for it to be nicely cooked all the way through. Let's say after 30 minutes, you're very hungry. You're not going to pull that chicken out of the oven after 30 minutes and start eating it because there's a very good chance that you're going to catch some kind of food poisoning, i.e. salmonella. So what you do is you apply patience and you have to wait that extra hour or half an hour for that chicken to be cooked all the way through so that you can enjoy a good meal and not have to worry about falling sick. It's the same thing with trading. You don't want to rush the situation. Sometimes you have to allow the market to set up all the way through. You have to allow it to be fully ready. Most private traders are too quick. They don't know how to apply patience. Patience is crucial. So while this is setting up, other currencies may have already set up. However, this is my point, guys. If we look across the board, look at the euro dollar. Euro dollar, it's inside the pink lines. For that reason, I'm not interested. I want it to be trading outside of the pink lines. If we look at the pound dollar is inside the pink lines. So what we want to see is a breakout to the downside. As the trend is already bearish, we want to see a breakout to the downside. Until that happens, we want to stand aside. And you can see quite clearly it's in consolidation. This is the daily chart. It's going sideways. I do have a short position on this based on a pullback strategy that I use. And this is now in profit, but it's not great profits. And I'll show you what is good profit in a second. Pound Aussie dollar, I'm also short on it. It's inside the pink lines. I've been short on the pound Aussie dollar since this point here. So this is now in a little bit of profit, but look at 1.6, a round number acting as a floor, a support level. Once this low point here is cleared, if I just get my tool. Once this low point is cleared, that's when I look to start compounding or adding further positions. For now, this is just going sideways. Sometimes, guys, I execute trades inside the pink lines. If price is pulling back and is inside the pink lines, I will take a trade, but I will reduce my risk because I'm inside the pink lines. So full allocation of risk would be 2%. Inside the pink lines, I would risk 1% or 0.5%, depending on my strategy. But point is, I'm showing you how the currency market as a whole is trading inside the range of 2016. I'm short on the pound New Zealand dollar. I've actually been short on the pound New Zealand dollar since last year, which is this point here. So at the time when I executed the trade, I was short on this. Price was below the low of 2015. So this had set up. But since I got triggered in, now remember, what is a good trade? A good trade is one where you execute your trading plan perfectly, regardless of the outcome. Regardless of the outcome. When I take a trade, I don't know what the outcome is going to be. That's why I always risk small. However, once that starts returning me a profit, I compound to accelerate the profit phase. And this is a good example. It's set up at this point here. This was a good entry point in terms of a pullback. My stop loss was above the round number 1.8, just in case it came back to retest it. And you can see that it did go on to retest it. So I had my stop loss above 1.8. I didn't get stopped out, and you can see how that has now moved into profit, but it's now just going sideways. It's going nowhere, really. I mean, if my entry point was here, I'm just a little bit in profit. But the longer the bigger the consolidation, the bigger the breakout. So, you know, if this has now been going on since October, this consolidation period. So we're looking at 1, 2, 3, 4, 5 months of consolidation. This has to break out at some point. That's the way the markets move, either to the upside or the downside. Ideally, as we're below the 200, we want to break out to the downside. If it goes against me, no love lost. My stop losses are in play. I've got no risk on this anymore. I'm just simply holding. Yeah, so I mean, that is the currency market as a whole. So if the currency market is range bound, if the currency market is just going sideways, where is the money? And the answer is, guys, stocks. That is where you want to be looking at. So let me just give you a quick idea. So Nvidia, which has been the best performing stock for me since last year. So I entered at $40. So this is going back to last year. Now notice that we are inside the range of 2016. But when I executed this trade, I was above the high of 2015. Last year. So I entered this trade in May of 2016. That means price at the time was above the high of 2015. I can actually show you that. If I just say remove that. Okay, so if I just open this up, you can see that this pink line here, so this is the high of 2016. This is the high of 2015. So when price broke above $40, it was above the all-time high of 2007. It was above the high of 2015. This is when I started executing long trades. Compounded, held all the way through. My stop loss is under $100. I haven't been stopped out yet because I use mental stop losses. I don't use physical stop losses until I need to. So what do I mean by that? I'll explain that in a second. Let me just clean this up again so we can go back to the clean charts. Okay. Now, just so that you can see what's happening on the weekly, above the weekly 200, trend filter is green. So I started executing long trades above $40. It has remained green since, apart from the last 2 or 3 months where the market has turned black. And that's because of it's a deep pullback. Daily time frame, above the daily 200. I first entered on this breakout here. And you can see how this has just shot like a bullet since. Now, if you have a look, price has pulled back at moments. And this is where traders need to learn to apply patience. You cannot expect the market to just shoot off in one direction. That's not what happens. It moves, it consolidates, a little bit of pullback, then it breaks out again. Then it goes for a little bit of a consolidation, maybe gaps, fills the gap, then it goes again. Little bit of consolidation, then it breaks out, then it goes again. If I kept on panicking, I would not be able to last the duration of this trend. And if you look at how I've looked at this in terms of levels. So when I entered above 40, I wanted price to go to $50, which is at this point here. Then it broke above $50. When it broke above 50, I wanted it to go to 60. And you can see how it gapped above $60. It came back to retest $60. And then I wanted it to go to $70. Found a little bit of resistance, broke above it, went into a bit of a consolidation, gapped above $80. Above $80, it went to $100, $120. And since then, it's finding support at $100. Now, my stop loss was mentally below $100. And what I mean by that is it's a mental stop loss, because if price broke below it like it did here, but then reversed back above and closed above it, I don't want to get prematurely stopped out. I only want to get stopped out when price confirms a close below $100. You can see that it hasn't confirmed a close. This is a red trend filter. The actual bar is not red, it's actually green. It was a bullish bar. It gapped below and then closed above. So what I'm looking for is a break and close above $120, and that's when I can start adding more positions, compounding further to the positions which I still have open. Guys, a single trend like this, you'd be surprised how much profit a single trend through compounding can return. And I mean significant. Okay, some people often ask me, can it be three figures? And the answer is yes. A single trend through compounding can return you triple figures. Okay, so that's one of the stocks that I'm in. Another stock that I'm in is Applied Materials. So you can see now, I've been in Applied Materials since this breakout at $30. Look at the potential reward to the upside. The high is just below $60. So there's plenty of space for this to move. Trading is all about thinking in terms of risk to reward. You want a small risk to return a large reward. You don't want to risk large to win large. That's what most people do. That's not how you want to do it. You want to risk small to win large. Risk to reward. Look at the weekly. Above the weekly 200 moving average, the trend filter is green. Now, there have been periods of black, but that doesn't faze me, because when it pulls back, it will turn black occasionally. But as long as it doesn't turn red on the weekly, I'm okay. Now, the daily has a lot more noise. I entered into this first at this point here, which is going back to August of last year. You can see now we are in March. I've been in this trade since August, and this has returned very, very good profit. And I don't have just one position, guys. I have multiple positions. And yes, there's a little bit of red here. I understand that. But that little bit of red has happened while the bigger time frame, the weekly, has remained green, or maybe even a bit black. So as long as this does not turn red, the weekly, I'm not worried about red bars on the daily. And you know, this is a good example of the lower down you go, the more noise you have to deal with. You can see how clean the monthly chart looks. Very, very clean. You go to the weekly chart, it's starting to get a little bit more noisy because you have more candles. You go down to the daily chart, a lot more candles, a lot more noise. So imagine all the day traders who are dealing with 1 hour time frames where you have 24 candles in a day. Then you're doing 15-minute time frames. 15 times 4 is 1 hour. 4 candles in 1 hour. Times that by 24. What's that? 96 candles, if I'm right. 24 times 4. 4 4s are 16. 4 2s are 8. Yeah, I think it's 96 candles. So 15 minutes, you have 96 candles. Imagine 1 hour, a 1 minute time frame. How many candles people are dealing with? It's ridiculous. Okay, so AMAT. Let's look at one of my top performing stocks of last year, and this is now starting to become good again. So I was in Boohoo. Some of you guys should be familiar with Boohoo, which is an online trading company. Look at the profit, its return. Look at the trend. Look at the move. This is a monthly chart. If you compare this, let's be realistic. Look at what Boohoo has done in the last year or so. Now, if you compare that to the euro dollar, look at what the euro dollar has done. Visually, you guys should be able to see the euro dollar has done nothing. It's gone sideways. Yet most private traders are fixated with this ridiculous currency, which is just going sideways. Doesn't make sense. You're just feeding brokers with the trades that you're taking repeatedly. Right, so going back to Boohoo, which is a UK stock, and I'm going to show you a few other UK stocks that I'm in. Trend to the upside. Look at the weekly. Now, this is quite a new stock, so there's no weekly 200 moving average. But look at the trend filter has remained green all the way through. If you look at the daily, a lot more candles. And look at what it's doing now. It went through a period of consolidation, and now it's breaking out and starting to get on another run. So the bigger the consolidation, the bigger the breakout. So here is a trend. Then it went through a correction. Bit of a breakup, but another correction. Now we want to see this go into another bull run. I have positions running on this, which are now in good profit, and I have compound set, which I'm waiting for price to trigger. Okay, so another stock that I'm in is Cas Minerals. It's a UK stock. Look at look at where I entered to the reward. The risk to the reward is massive. If you go to the weekly, above the weekly 200, the trend filter is green. If you look at the daily, above the daily 200, the trend filter is predominantly green, but there are areas where it pulls back. But as long as the weekly remains green, which it has done all the way through, I'm not really phased with these pullback periods. This is where people panic, but this is where you've got to detach yourself from the market. Because you're focusing on the money and you're not focusing on the process, that's why you panic. That's why you get stressed out. Whereas for me, I've been doing this for 10 years. I know that if you give price the space to move, you won't panic. You don't stress. Do I sound stressed? Do I sound high strung? Not at all. That is because I know that by following the process, by having impeccable good risk management, by allowing your winning trades to run, to apply patience, to move between foreign exchange, stocks, commodities, to know where, to be able to identify where the money is, and to be able to execute breakout strategies, pullback strategies, lower time frame strategies. The money just comes through effortlessly. So at the moment, this has gone for a pullback. Now look at where it found resistance. 600, which is £6. It found resistance at £6. This big bar here, that is because of earnings. But look at where it found support, £5. So it found resistance at £6. It found support at £5, and it's remained above £5. That's a major support level. As long as price remains above £5, I'm not looking to execute any of my trades. Exit any of my trades. In fact, we can see a bounce to the upside. If once price breaks and closes above this level, this is where, this is where I will look to add potentially further positions. This is where I'll start compounding further. Okay, so I'm giving you guys a really good example of stocks that I'm in. Another stock that I'm in is BA, British Airways. Now, I don't know if you know this, but Warren Buffett removed money from can't remember which sector it was, but Warren Buffett has invested. I think I read figures of around $900 million into airlines, because he believes that's where the money is, and he's not wrong. Looking at price, we can see why he's looking at airlines, because it went into a trend, it went into a consolidation. You guys should be able to identify quite clearly. Here's a trend, here's a consolidation. What we want is a breakout of this high point. And that's exactly what's happened. And that's where I've started entering long positions. I'm not interested in trading consolidation periods. I'm not interested in predicting tops and bottoms. What I'm waiting for is a market to establish itself for a clear trend direction. And then I start executing my strategy. What I'm looking for now is price to move towards $200. If it moves towards $200, I'd then like to see it clear $200 and move towards $250 and $300. Okay, if you look at LUV, Southwest Airlines, this is another airline that I'm long on. The last time I traded this was 2014, 2013, 2014. You can see here. This is a classic example of a bull run where I entered around $20, and by the time I exited my trade, I believe it was around $40. Yeah, pullback, consolidation. Price has now broken the all-time high. It's above $50 as well. This is significant because $50 is a major level. If it clears $50, now I'm looking for price to move towards $100. But 60, 70, 80, 90, those are the incremental stages. You can see now that it's at $60. Above the weekly 200, trend filter is green. Above the daily 200, trend filter is green. Okay, let's have a look at another stock. Another stock that I'm currently long on is CMP. So what else I look at are sectors. So I have software that scans instruments for me, that scans the sectors for me, and then it will tell me which sectors have been performing very well over the last week, month, year, whatever it is. I will then narrow down to the individual stocks within the sectors. Now, before I forget, let me just look at one thing here, and this is something that will really highlight why you want to be long on stocks. Just the other day, I spoke to someone who's continuously shorting the Dow. It's ridiculous. I do not understand why anyone would even comprehend trying to short the Dow. It's a ridiculous thought process because the Dow is creating new highs. So if the Dow is creating new highs, you want to be going in that direction. What most private traders are doing is trying to guess the top of it and are waiting for a crash. And the reason why people are waiting for a crash is because the news is telling them that this can't be sustained because Donald Trump puts his foot in his mouth every so often, and people react to that. It's ridiculous. What you want to be doing is looking at what price is doing, and at the moment, price is creating new highs. In fact, look at what it's done. It's gapped up at the start of the month. It's gapped up. You look at the weekly. Above the weekly 200, trend filter is green. Above the daily 200, trend filter is green. Now let's just go back to this point here. This is when 20,000 was considered a resistance level that price would never break. If we compress it, it was this point here where we had this crash, where everyone started panicking. We're in some kind of crash. Oh my God, what's happening? Well, all that's happening is that we've had a trend from 2009 all the way through to 2015. We had a 6-year bull trend. The market was bound to correct at some point, bound to go into an area of consolidation. And then we had a move to the upside. Now, why did price fail at this point? Well, that's because if you go to the weekly time frame, we can see that price bounced off the weekly 200 moving average. Bounced back up, came back down, tested it 2 more times. You can see tried to break through, bulls closed above, and since then price has gone on to create new highs. And if you look at what price is doing, it's above 20,000. If we go to the daily time frame, we can see that today price has gapped up. Why anyone would want to be shorting indices, shorting stocks, is just beyond me. And that really comes down to A, ego, trying to catch tops and bottoms, B, a hopeful strategy, it's gambling, it's not trading, and C, just a real lack of understanding of what good trading is about. And if you look at all the other indices, they're all doing the same thing. There's the NASDAQ creating new highs. If I compress it, creating new highs there. That's the NASDAQ, and S&P 500 as well. Whereas my chart is just being a bit slow to load up. There's probably a bottleneck somewhere in my internet. Okay, but if you guys look at the S&P 500 by yourself or on your own charts, you'll see that it's also creating new highs. So all the indices are creating new highs. So why you would want to go short is beyond me. Okay, I think this will be a good point to actually stop the webinar, or to end the webinar rather. I'm just going to go back to my entire screen. So I'm just going to remind you guys how you can connect with me. There aren't any questions in the chat box. I thought there would be questions, but there aren't. Okay, so here is the live training on Monday, zaheer.live/seminar. One thing I forgot to mention, guys, is that both in the live training and the online training, you'll also be trained in stocks. So it won't just be foreign exchange, you'll also be trained in stocks. And not only that, I will give you a scanned watch list of the best possible stocks. So all the stocks that you've seen, NVIDIA, British Airways, Southwest Airlines, Applied Material, all of those US stocks that you've just seen, you'll have access to them. And you'll have access to them on a weekly basis, so you know exactly what the stocks are doing. So you won't just be trained on FX, you'll be trained on stocks. I mean, for £99, it's a no-brainer if you are serious about trading. You really got to question how serious people are. If you're using free software, if you're just bouncing from one free seminar to one free webinar, to one free ebook. If you're bouncing around all of these strategies that are all totally free, then I would seriously question how serious you are about trading, because this is a business and you want to invest into it. If you want to attend the online trading, then it's the same URL, zaheer.live/seminar, except this one is zaheer.live/apprentice. Check out my Medium blog. I put a lot of information on my Medium blog. Every weekend I put a summary up there, but I talk about stocks that I'm in. I talk about compounding positions. There you go. I mentioned British Airways before it actually broke out. Marriott stock I'm looking at. Southwest Airlines. So lots and lots of blogs on here. So check out my Medium website, medium.com/@ZaheerAnwari. Please connect with me on LinkedIn. I'm quite active on LinkedIn, so search for me. If you're on Facebook, please put in this URL, facebook.com/CityTraderLifestyle, which is my Facebook page. Yeah, and as a reminder, also you get this ebook, which covers everything really in terms of what we've covered today. It'll just be a good revision ebook. That is all part of the £99 training. I was giving this ebook out for free, but I think people are getting the wrong idea of the fact that everything is contained in this. People were overlooking the word almost. If someone gave me a quality, if I didn't know my mentor and she gave me this ebook, I would be knocking on her door wanting more information. That's how powerful this ebook is. What most people do is think, for some reason, they're blinded by the word almost, and they just see the complete guide to trading. And I never hear back from anyone. This is an in-depth introduction into the way you should be trading as private traders. You want to look beyond all the noise and all the clutter that you guys are fed consistently on a daily basis. Start really being aware of what it takes to be a good trader. Okay, I'm just going to check there aren't any questions. Yeah, no questions. Okay, well, administrator, thank you for today, and for the rest of you guys, have a wonderful end to the week. And if you want to email me, just put that in the chat box, zaheeranwari.com, which is my name, zaheer@zaheeranwari.com. Okay, all the best, guys. Take care. Bye-bye.